Welcome back, guys. So now we are looking at the fixed asset note. In your level, it's not going to be really difficult or super technical. It's going to be very doable. And our question requires us to find the values for A, B, C, D, as here on the note, as you can see them. Okay, cool. Let's get to it. The value of A, which is the cost of equipment, that is easy to find. It's just you navigating to the trial balance, looking at the equipment cost, just 260,000. So we'll just put it there, 260,000. And just for this purposes, we'll also put it here so that you can see the numbers and how they work out. $260,000. There we go. Therefore, the value of C, we can get that very easily because it is the cost less accumulated depreciation. That is the carrying value at the beginning of the year, which is the cost less accumulated depreciation, which is 560 less 112. That makes it 448,000. This is something you can go ahead and put here. It's going to be 560,000 less 112,000. That'll give you 448,000. Let's go to the value of B. So we need to know we need to calculate our depreciation for the current year. So we are told that we provide for depreciation as follows. We're looking for equipment. Equipment, it's 20% per annum on the diminishing balance method. Okay, cool. So we have a note here which says that additional equipment at a total cost of 24,800 was purchased on 1 September 2018. So that has already been included in this above note. So what is important to note here is that we have old equipment and we have new equipment. Which we're going to account for differently. So for the old equipment, it's very easy because we're just going to take the carrying amount. So the depreciation is on the diminishing balance method. So we're going to take the carrying amount. So we need the carrying amount even though it wasn't required there. So it's going to be 260,000 less our accumulated depreciation of 69,200. That'll give us an amount of 190,800. And we're told that it's 20% per annum on a diminishing method. So we're just going to need 20% of that. 190,800 times by 20%, that is 38,160. Means our depreciation is 38,160 and our closing carrying amount is going to be 190,800 less 38,160. This is excluding the new equipment. That'll give us 152,640. Okay, cool. So we have new equipment though of how much? Of 24,800. So this is new. When was it purchased? We need a timeline. It was purchased on the 1st of September 2018. So we cannot depreciate it fully for the 12 months. So what do we then have to do here? We have to, okay, let's find the 20%. It's 20%, but it's going to have to be for how many months? We have it for September, October, November, December, January, February. So it's 6 months out of the 12 months. So that's how much depreciation we're going to account for. And it is going to be 24,800 times by 0.20 times by 6 over 12. It's 2,480. So our total depreciation amount is going to be this 38,160 plus 2,480. That is going to be our total depreciation cost for the current year. Which is 40,640. And just for purposes of this video, let's just complete this table and see if it's going to balance. So this is going to be accumulated depreciation is going to be this accumulated depreciation plus this depreciation. So it's going to be 69,200 plus the 40,640, giving us 109. Okay, you can't really see there. Let me just pull it lower. 109,840, giving us a carrying amount of, we've already been given the cost, 260. Okay, how do they get this cost of 260? Is it correct? Okay, guys, the reason why our amounts were not making sense, we made a mistake. So this is a trial balance at year end. So that means that this 260 that we see here is not our opening amount. It's not A, but it is our closing amount. Therefore, to get A, we were supposed to say this 260 here, which is our closing, less the addition of 24,800, and that would have given us 235,200. So this means that this amount is 235,200. Therefore means we have to change this amount here and make it 235,200, and this changes here. 235,200 less 69,200 gives us 166,000, and 20% of that is 33,200. Meaning that this will also change here. But for now, that's fine. Let's just leave this out. So our depreciation for the year is 33,200, and for the new equipment, it is 2,480. meaning that our total depreciation amounts to 33,200 plus 2,480, giving us 35,680. So it means that our accumulated depreciation is going to now be 69,200 plus the 35,680. It's going to be 104,880. But we do not need to calculate that, so we're just going to leave it out. And then vehicles, we're told it's 25% per annum on cost. And our vehicle cost is 560. So 560,000 times by 25%. That is 1,400 worth of depreciation. 1,400. Now these amounts also affect depreciation, affects your statement of comprehensive income. So therefore these amounts would have to be shown in that statement thereon. Okay guys, that's all from our fixed asset note for now. Next up is our ratio analysis.